to another RS wave update. Okay, so this video is basically to give you an update on exactly where the US dollar is at the moment and what we can expect to see, which is in line with the previous idea I just posted. I will link it down below in related ideas about the Dow Jones and how we're getting very close to the top now. Okay, and have a look at that video and see how it aligns with this, because there's a big move coming up in the sorry, I just need to change these colors, they're wrong. And how this relates to what's unfolding. Now, this is part of the Bullish Series that I created, but I'm just giving you a more in-depth update here. So we're in the midst of a B wave long term, but within that B wave, we have a B wave. And then within that B wave, we have the first part of the correction, which is an A wave, right? So basically it's the larger A wave, which is up here. We'll make that 28. Yep, that's big. Okay, cool. So this is a zigzag. Okay. Now, in order to complete the zigzag, we need to see wave E end to complete wave B, and then that is going to take us to wave C, which is going to crash the Dow Jones, going to crash cryptos. It's going to be the end of the US dollar's move up since basically around the GFC, right? Now, if you would have seen those videos, especially the Dow Jones one, you'll know that this is part of the reason why we had a GFC. This was the first part. The next GFC, which is coming, that's going to be wave C. So everything in between has just been corrective in the DXY, the US dollar, but in terms of in the markets, it has a bit of a different feel to it, right? So whenever the US dollar goes up, markets crash. Okay. And I'm talking about the impulsive portions of it, like the A wave and the C wave. Anything between, the markets don't take it too seriously. It's corrective, and the markets can move up during these times. Okay, so I wouldn't take too seriously what happens in B waves. It's more about what happens after the B wave completes, because that's when the shock comes. Okay, so looking a bit closer to the very detailed analysis that I've done here on the E wave, which is the last move of the B wave, right? I need to take you down to the hourly. I think the hourly might be a bit too small. Maybe the 4 hour. We'll start with the 4 hour, right? So since the top, we had a wave 1, 2, and then we had a 1, 2, 3, 4, 5. So you can see alternation happening between within wave 3. You can see alternation between 2 and 4. So 2 was short and sharp, 4 was a bit more drawn out. And it's the same thing with wave 2, the major wave 2 up here. It was pretty short and sharp, and here it's a bit more drawn out. So it's the same thing, really. When it comes to E waves, they tend to sort of create like an ending wedge pattern type thing, right? It's not exactly an ending wedge. In my personal opinion, it's just a simple 5-wave move for wave E. Okay. So interestingly, this is what I consider a type 1, excuse me, a type 1 expanded zigzag, because it did expand above the end of wave A, but then, as I've mentioned in previous videos, you can see, like, if you pay attention to my videos, you can actually start to learn a lot. This one went below, then went above. Now it's come back to meet that point in time where it's come back to the top of wave A. So this is just a simple type 1 expanded zigzag. A normal zigzag, a regular zigzag, it just does this. Okay, and all the A, B, C, D, E is contained within whatever waves you see in there, but it doesn't look so expanded the way this one has appeared. So Yeah, that's why it's good to learn the waves. I keep saying that, I know, but it's true. So when it comes to where we are now, we're in the last part of that. We're in the last part of the wave E, right? So we've seen wave 3 complete down here, and now we're in wave 4. So what have we seen so far? We've seen A, B, C. Now, I know this is overlapping, but this is a corrective wave. So to me, there's no other explanation for it. And now we're going to see a sharp D. Now, we know that the sharp Ds, they're very common in these markets, and usually they're very deceptive. A lot of people may think that this will be a 5-wave move, and they'll go long too early. Or what might even happen is, because it's a 3-wave move, right? They'll count 5 waves down simply because there was an A, B, C, and then you're going to get your E, and then you're going to get your wave 5, which is the last wave. So that's going to look like it's going to look like a 5-wave pattern. And even though that's kind of like true and it might appear to be right, you don't have a framework to tell you that that's like that you're super positive about it, right? So here I can see an A, a 3, 3, 5, 3, 5 pattern for B. So now I'm expecting a move down for wave D that is similar in length to this, which started here. So it could go just below that white dotted line. And then I do believe wave E will come back to retest. And then we'll finally get our last 5-wave move down to complete basically wave E, right? And that'll be the end of wave B. And then that's when we're going to have the crash that I've been talking about. So these next couple of months, few months, they're critical because they're going to basically, the USD will continue to decline, but it's not going to be forever. It's just going to be to complete wave E because this is a zigzag, as I've explained it. And then we're going to get that final move up, which is basically going to be GFC 2.0, and it's just going to crash everything, right? It's going to crash oil, it's going to crash gold, silver, cryptos, the Dow Jones, the Nasdaq, all that sort of stuff. But it's not bad news because once wave A ends, what comes after wave A? Right, we're going to get wave B. So we're going to get a complete reaction in the opposite direction. And then corrections may be shallow. We may continue to see just impulsive move that is basically an expanded B wave, because as you've seen, these corrective moves can expand quite a bit. And if they're type 2s, then they won't come back to where it started. It'll just keep going. So that's the best way that I can explain it without going forever with my videos, because I tend to go on, and some people comment, get to the point already. Yeah, thank you. I will. So another way to understand this is a CDE pattern, right? In this particular case, the D didn't go above the start of wave B. But if you look at the US dollar chart, which is actually the ticker is US dollar, you actually did see the D wave go above this area, right? And it doesn't matter because there's no rule saying that it can't. So that chart is still valid. The point here is, do you understand the pattern? Do you understand what's coming? How does it fit into the larger picture? I've given you the Dow Jones version. I've given you many crypto versions. I've given you the Bullish Series. I've literally just explained what's going to happen to the US dollar to complete this pattern. We're going to see another move down followed by an E. I don't know how long that E is going to be. That could be a little bit longer. I'm not sure. Right, this is just a guide. Please don't take my my markings as gospel. Right, don't bet the house on what I say. But just this is just a general overview of the patterns that we're expecting, because we know, because like I say, I created Arias Wave. Why did I do that? Because I wanted to know what the hell I'm looking at on a chart. If you don't know what you're looking at on a chart, then really you're trading blindly, you're following the crowd. And yeah, we all know the US dollar is a massive driving force and important factor in what happens to everything, right? Because everything is against the US dollar. Okay, why do commodities trade inversely to the US dollar? Right, you got to ask yourself those questions. Why does gold? Why does it? You can go on and on. Do your research, right? I did my research early on, and I was still confused. That's why I developed this system to try to help people understand what they're looking at, what they're seeing, color coded for a reason, because in my course I actually color code the chart that tells you exactly what's going on in a bear and a bull market, and then it's up to you to observe and test, back test, try to prove it wrong. Right, I tried to prove it wrong for 6 years. That's why eventually it became something I teach, because I wouldn't teach you garbage. What the hell, what would be the point of teaching people garbage? It's not going to make my reputation any better. It's not going to help my analysis. I'm going to lose money. I'm going to look stupid. I mean, the list goes on, right? We need to be doing things that actually work. Other people use indicators, oscillators, trend lines, this and that. Now, if you know Arias wave, you can couple that with fundamentals, trend lines, oscillate. You can do whatever you want. Everybody has their own style of trading. But to me, price action is the most important indicator on a chart. So if you have that down first, then you can use all the other fancy gadgets that come, installed by default on many trading platforms, TradingView included. Um, yeah. So hopefully this has given you a bit of an understanding that we're still going to see more further downside in the US dollar. We're still going to see further upside in the Dow and cryptos, and then we need to get out when it's time. Now, a lot can happen in a few months, right? Check out the beginning of this move here. How long did it take? Let's have a look. It took 344 days, right? And that was pretty weak. That was a pretty weak move, right? We must admit, right? But then you look at other impulsive moves, right? Like this was a B wave. It had a leading a B, and then a C. When markets really want to move, and they move quick. How long did that take? 335 days, right? Sometimes you can see things happen even faster. Have a look at some of the crypto charts, how they move. They have larger percentage gains, right? And they move a lot quicker. They're more impulsive. They literally can go straight up in a straight line, and you will not have time to react, right? Now, I don't think it's going to take a year for this to happen, because, as you know, we're near the bottom. But it's going to be very interesting to see what happens in the other markets and how they respond to this very devalued fiat currency, which is the main driver behind a lot of the stuff that's going on. So hopefully you've found this video interesting and informative. Thank you for watching.